Ladies and gentlemen, welcome. My name is Alex Dvorkin and I'm a managing partner at 4D Capital. We specialize in a very unique mathematical approach to the stock market where we calculate the market and individual stocks in multidimensional space, and when we do, essentially perfect order emerges. On top of that, we've developed a number of very powerful timing tools, and when we combine them both together, we can very often tell what the overall stock market or individual stocks will do in both time and price. And we can typically do it on multiple time frames. Whether we're talking about long-term or short-term, doesn't really matter. Now, I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies. Our firm's goal is to essentially identify stocks that will 2x, 5x, 10x within a relatively short period of time. And so we're basically looking for the next NVIDIA, Apple, Bitcoin, Tesla, so on and so forth. And we can typically do it by implementing or by using our very powerful software that allows us to calculate the entire market in three-dimensional space. And when it does, it essentially identifies those stocks that are about to put in very important bottoms, long-term bottoms. We're talking about long-term bottoms, and then subsequently increase in value quite substantially. So our software can already calculate the upcoming turning point, which I will show as an example that when we're going to be talking about Tesla here in a second. It is able to identify an upcoming turning point, whether it's a top or bottom doesn't really matter, but we as a firm concentrate mostly on bottoms because, as you know, it is a lot more difficult to be on the short side than to be on a long side. And once that bottom is identified, for example, it is then able to project and calculate what the next move higher is going to be. And that is one of the reasons, because we can calculate the entire market. We can pick out only the stocks that 2x, 5x, 10x, and so on and so forth. So today we're going to be looking at a crowd's favorite, Tesla. Tesla is one of our 52 biannual stocks that we review twice a week. I'm sorry, not twice a week. It is one of our 52 mega caps section stocks, and we review those stocks twice a year, and when we publish an update on those stocks. So Tesla is one of them. Let's jump into it and see what it says. So basically what you're seeing on the chart in front of you, particularly for those people who are not familiar with our work, is cycle composites. These cycle composites are responsible for the bottoms, and the top composites, these composites are responsible for the tops, as is evident from the chart. So this is a very simplistic representation of very complex mathematical concepts. Let me leave it there because some people question, what is this? It looks very simple. It is not very simple. So what we do essentially is we scan the chart back and we identify those cycle composites, and we project them into the future very accurately. Now, what makes matter even a little bit more difficult is that there are multiple composites running in any given market or any given stock at any particular time. So some of them have 2, some of them have 3, some of them even have more than that. I use Dow Jones as an example always. Dow Jones has 2 bottom composites and 2 upper composites running at the same time. But when you put them together, if you know how to put them together, by the way, this is just a long-term cycles. I can narrow it down into short-term composition, as you can see. Of course, I'm recording that video, and it's going to give me an error. So let me just close this here. This demonstration has failed. I apologize for that. Okay, so let me close this. Okay, let's get going. Basically what I was saying is we can narrow it down into shorter and shorter time frames depending on the time frame we're looking at. But if you combine both upper and lower composites, all of them, you can very closely replicate what you see on a two-dimensional time and price chart. Okay, so the lines you see on the chart, what we call cycle clusters. This is once again a very simplistic representation of very complex mathematical concepts, and what we do, we scan the chart back, we identify these proprietary cycles, and we project them into the future. And what we found over the years is that these cycles or important market turns or turns in individual stocks happen not when any particular individual cycle hits a certain point of time. They typically happen when there's a multitude of cycles that hit at the same time. So for example, we have 2, 5, 6, 7, 8, 10 cycles arriving at the same time on the same day, rest assured there's going to be a turning point on that particular stock or the overall market. I give 2019, or not 2019, 2009 bottom example in March, I believe March 6th. As an example, at that time we had 15, very unusual occurrence, we had 15 long-term cycles hitting on that date. So you could rest assured that the bear market was completing at that juncture, and then the stock market would begin to recover, and that's of course exactly what happened. So anyway, these cycle clusters get us into the neighborhood of what the overall stock market is doing. I typically say, depending on the length of the cycle, there's typically a 1 to 2 month margin of error associated with them, plus or minus. But cycle clusters give us the exact date of when any particular stock will top or bottom. So that's how we can time in both time and price. And the red dots you see are the three-dimensional calculations that give us the exact location of an upcoming potential time and price turning point. So when we combine them all together, we can essentially very clearly identify where an upcoming turning point is going to be. Okay, with that said, let's concentrate on Tesla and see what it tells us. So as you can see, we had a major bottom here, we had a major top here, we had a secondary mid-cycle, as we call them, bottom here, and the stock market has bounced, but bounced not as strongly as the overall Nasdaq or some of the tech stocks there. So there's a lot of hope on the street, so to speak, that the bounce will continue, and Tesla will increase quite substantially going forward. Well, unfortunately, I'm going to have to rain on your parade, at least at this point in time, but I think if you give the forecast a little bit more time, you're going to be very happy. So we're currently moving into this major cycle bottom that is scheduled for the fourth quarter of 2026. And until that happens, Tesla is unlikely to go anywhere, especially if we consider our overall market forecast. And for those who are not familiar with our overall market forecast, and for those who are not subscribers, there's two ways you can find out. Way number one, you can attend one of our webinars. I think the next one is the following Friday, September 19th, I believe. The link to sign up is at the description of the video. This sitting is very limited, only to 10 people. So if you do want to get that information, I encourage you to sign up. And the other way to get that information is to request a 30-day free trial for our service, and you can do the same at the link at the bottom of this video. So basically, let me just very quickly summarize. This particular bounce off of April's low is done for Tesla, or nearly done, and it's going to be stuck in the trading range with a little bit of downside going into this particular bottom of fourth quarter of 2026. Now, what's saving Tesla in this particular juncture is this mid-cycle top. It is not outweighs, but it dilutes greatly the possibility of downside for the stock. So typically what happens, and according to our calculations, we're going to see the bottom where the previous bottom was. As you can see, these two red dots, let's say, so if we click on them, they're approximately $182, $200 a share, and that's where the bottom for Tesla is going to be in the fourth quarter of 2026, according to our calculations. Now, I'm not giving you exact time and price parameters, and that is for a reason. But, one of the reasons here, there's nothing for you to do with Tesla stock at this point in time. It is unattractive both on the long side and the short side, so if you in any of those positions, perhaps you just want to sit on it, but otherwise it is best to wait for this particular mid-cycle bottom, because once this mid-cycle bottom arrives, this stock is going to surge into this major cycle top, and that's where you're going to be able to see quite a significant return on the stock. It is most likely going to be a structure similar to what you see here, perhaps from here to here, or here to here, or even here to here. It's going to be a variant of that, but it's going to be a very strong, powerful move from this fourth quarter of 2026 bottom that is going to be at approximately $200 a share to this major cycle top that is scheduled for late 2027, but most likely going to extend into 2028. Let me show you another way to look at it. So this is yet another representation of our three-dimensional calculations, and this is what I was talking about, that the bounce for Tesla stock is most likely complete. This is a powerful structure typically only when we're coming out of a bounce, and that's typically when individual stocks top before rolling over and decreasing into a slightly lower low that we anticipate for Tesla stock. So that's the forecast. Basically not very attractive at the moment, but it will become very, very attractive at the end of next year when that major bottom for the stock will occur at approximately $200 a share. We'll obviously do an update by that point in time, hopefully a couple of updates for Tesla stock. Now the top for this particular bounce might be in, it might go slightly higher, it doesn't have to. All of the time and price calculations for the bounce completion point have been satisfied for the stock. It can trade here a little bit because of that variance associated with both the mid-cycle top and the major cycle bottom. So it'll essentially be stuck in the trading range with a slight downside to complete its major cycle down once again. I'm probably saying it for the 20th time at the end of 2026. So that's the forecast for Tesla. Once again, we have a webinar coming on September 19th. A link in the description of the video. We only have 10 seats available. The selling point of that webinar, not only do we showcase our software and how it is able to scan the entire market and identify stocks that will 2x, 5x, 10x going forward, it also educates you on how we calculate the market in three-dimensional space, for example. But it also we also share our overall stock market forecast and what the stock market is going to do going forward. We typically don't share that information, but we do in our webinar. So if that sounds interesting, I do encourage you to sign up. And finally, as I mentioned earlier, we have a 30-day free trial associated with our work. No strings attached, no credit cards, none of that. So if you would be interested in seeing our work in action for the overall stock market, for the 52 mega cap stocks, for the fast movers, for the super equities, there is so much information. It is mind-boggling. We're identifying so many opportunities. Our software is just amazing. I'm very, very excited and happy about it. So you can check all of that stuff out if you so desire. That's it for today. Thank you very much for your time. Have a wonderful day ahead, and we'll be back with another update most likely tomorrow. Bye-bye.